From Nike, and they have beaten estimates on first blush. We were looking for $1.16 a share. We got $1.24. We were looking for revenue of $5.53 billion. We got $5.77 billion. Darren Ravel is at our news desk with more details on this. Looks like a big, and in fact, Darren, look at that,
yeah,
a 4% gain suddenly.
That's a big jump here. Also on the gross margin, Bill, expecting 44.8%, 44.3. We're also looking for $5.67 billion for Q1. We're trying to find out what that is. Now, let me just quickly explain what happened last time, why there was that big drop. Nike pays its factories a flat fee instead of a percentage, which is what the other shoe manufacturers do. So they share in the costs when something goes up or if there's money savings. With Nike, they're keeping all the profits, but they're also paying all the costs. And that's one of the reasons why, as the costs went up, they couldn't pass those costs on to the retailers. And that's why Nike got hammered. It's going to be interesting to hear. They are not having a conference call today. They are having a private meeting tomorrow. We will be there tomorrow with CFO Don Blair and President Charlie Denson, where they're going to, for the first time, explain how they are going to bake in these costs, which is going to be key. But right now, obviously, the street really likes this number. We'll get back to more as it comes in.
Thank you, sir. Let's bring in our analysts who've had differing opinions on Cisco's shares. Dan Popowicz is portfolio manager with Fifth Third Asset Management, which owns over 175,000 shares of Nike. They've been bullish on the stock. Harry Rady is Chief Investment Officer, portfolio manager with Rady Asset Management. He has not been bullish on this stock. So, Dan, I guess, so from what we see so far, this looks like a pretty good number.
It shows that demand remains strong for Nike, that based on the sales and also the futures number, that there's strong demand for Nike products across the globe, really.
Harry, what do you think?
They're extraordinarily good numbers, you know, but we think that that's sort of backward looking and we look forward. And we just think that, you know, historically the stock's traded around 16 times earnings, and it's trading, you know, 19 times earning or more go after this run up today. So we just think from a risk reward perspective that the good news is discounted in the stock, and we think that, you know, while in the short term with the analyst day, today's numbers, that there could be some short-term momentum, over coming quarters we are concerned that rising commodity prices combined with the smaller, more nimble competitors could nip at their heels and cause their margins to compress.
Harry, what would it take, though, to change your mind? I mean, this is a good report, and I take your point about valuations, but is it just the commodity aspect of things that would have to fall into place for you to change your mind on the stock, or would there be something more to it?
Well, you know, it's a $40 billion market cap, and in retail, bigger's not necessarily better. So it would just take a pretty significant pullback in the shares to get us interested, you know, given that there are just so many attractive and interesting competitors in the retail space, and retail is so competitive and so volatile that you've really got to be quick on your feet as an investor, and Nike would not be where we would want to play.
Darren Ravel has more for us. He's been looking through the report.
I think it's important to say, you know, I've talked to analysts, and they say when they do bake in these costs, when they do pass it on to the retailer, whatever it is, it appears like people will still buy Nike product. It is so hot, it is that differentiatable. I would say also on the future orders, again, this is right now, but the future orders, North America up 14%, China 24%. Those are numbers I think that people want to see, that China is still that big number out there, in North America to have that type of number when our economy necessarily hasn't turned around the way we thought it was, is a good number.
You know, Dan, with any of these numbers here, when we ask you a question, it's going to seem like a softball question given your bullishness on this stock, but the fact remains that commodity prices are not coming down. Wage levels overseas, where they do all of their manufacturing, are not coming down, so their costs are only going to go up, and at some point you would think they will find it difficult to pass these costs on to their customers, don't you think?
Well, we think that actually this is the worst gross margin type figure we're going to see for, say, the next 12 months.
What do you say?
Really, they've been behind the curve due on pricing and some of those cost inputs that you're mentioning, Bill. But from here, they have announced price increases. That will kick in. The China futures number is very positive because that is a more profitable region, so we think that will also lend improvement to margins. And apparel will continue to grow faster too, and that is a positive factor for profit. So we think we like to look ahead as well, and we think that this is the main blemish on this today's quarter is the gross margin figure, and then going forward, that number will improve.
Harry, what about Europe? Does that worry you in terms of Nike's presence there? They've been trying to expand into certain sectors of Europe. Not a good time to do it, certainly.
Yeah, I mean, but Nike is so big and so diversified geographically that while Europe's a concern, that could easily be offset by China. So Europe is not a concern. I think the competitive landscape combined with rising commodity prices, combined with the stock price and the valuation are really my concerns.
All right, Dan, good to see you both. Harry, thanks for being with us today. Appreciate it very much.
Thanks for having me.
And incidentally, our Darren Ravel is going to